Hi, my name is Matthias. I work as API strategist at Software AG. And today I'm going to present the big rebundling in financial services. Now, when I was researching for this talk, I talked to lots of different people about their experiences with financial services and with banking in particular. And one conversation I had was very impressive to me and also was very formative for this talk. And that's when I talked to David. David here. He was very enthusiastic about his banking experience, about his bank that he has. And he said things like, they really understand me and they really understand what's important to me. And these are terms that you usually don't hear people use when they talk about their bank and their experience with banks. So, one of the things you need to know about David is that he is very focused on protecting the climate, on protecting the environment, and on sustainability. And when I sat down with him to look at this bank and his experience with banks, with the bank, he showed me his app. One particular thing that he showed me is that with every payment that he does, they are protecting a certain amount of rainforest and endangered forest for him. And that's very important to him. It speaks to his values. And other than that, it's of course also a digital bank, so it has all the things that you usually would expect from a bank with a good mobile app integration of savings and checking account and credit cards, of course. And that's all there. So I was really interested in how this bank could make such a lasting impact on their customers. And when I dug deeper, I found out that actually what he showed me, what David showed me, is actually not a bank. It offers banking services, but it's not a bank. It's not a licensed bank. It consists of a fintech, which offers a app and all of this, so let's say, branding towards sustainability and climate friendliness and so forth. And then on the other hand, there is a real bank underneath that's not visible and still offers its banking services, its core banking to the fintech so that as a bundle, the fintech with its app and the core bank together can be delivered as a working banking bundle to the end customer. So this is actually a bundle. It's an app provided by the fintech, and there is a actual bank underneath which provides the banking service. So let's go a little bit deeper into bundling. What bundling actually means. It's a very simple concept. It just means that you have several products and services, banking products and banking services, that you take together, you package them together, and you offer them as a package to the customer. This is bundling, right? You can think of it as, okay, you have a block or a box of Legos, and you put all of these Legos together, or some of these Legos together, and you have a bundle. So this bundle is what is presented to the customer. And when you say bundling, you also need to say unbundling, right? It's the inverse function. You have a product, a complicated product, right, on the right side, and you take this complicated product apart into its constituent products or services, into smaller, more handleable, into smaller or more atomic products or services. And then there's another bundling step. This is the rebundling, where you take those pieces and assemble them in completely new ways. And there's actually two forms of it, where you take the existing pieces or you add new pieces to the Lego box. And out of these new pieces and the existing pieces, you then create something new, you recombine them, and you get something that hasn't been there before. I've shown you this Lego example And with Lego, it is you build something, then you take it apart, you build something new. And the same is true when you build bundles. You can build a bundle, you take it apart, and it's a cyclical process. Now, we have looked at bundling and unbundling in terms of in a business domain, right? So there's products and there's services, and we're building a business product or business services that we're going to offer to a customer. But the concept of bundling and rebundling, this can also be applied to IT and to technology, where the building blocks are then the APIs, and the digital solutions that you build out of those APIs are basically the bundle or the assembly. And you can also go the reverse way where you unbundle things. This is typically when you have a monolith or some very complicated big application, you take it apart into smaller microservices or APIs. So bundling and unbundling is really a universal concept applicable to business and applicable to IT. Now, what we want to do now in this talk is apply these concepts to banking. And we're going to look at applying bundling and unbundling in banking in 3 different stages. Like we're going to look at what's the role of bundling and unbundling in the past, what's the role of it now, and what's the role of it potentially in the future. So let's start with the past. Banking as we know it means a branch of a bank, or we have a direct bank, a digital bank only. But what unites all of them is that they are basically very focused on efficiency and providing mass market offers. So what they typically do, because they're so focused on efficiency, is that they take the different banking services like a current account, credit card, trading account, mortgage, all of these different services, and they bundle them together in one big mass market banking offer. If you have your current account at one bank, it's very likely you have your credit card there as well, you have your retirement account there as well. So this is a result of efficiency and focus on mass market offers, and that's what we've seen banks do in the past. What we see now is in the present is open banking, right? So open banking is the taking the next step where you look at this mass market banking offer that previously was created, and now you take it apart. So it's unbundling this big mass market offer into smaller building blocks, smaller APIs. And then you get something like a credit card API, a current account API, a savings account API, a retirement account, trading account, mortgage account API. So it's a lot of APIs that are created with open banking. And open banking is, it may have started in the UK or EU, but it's now a global phenomenon. It's all over the globe. Open banking is discussed. There are 2 kind of bigger flavors of it. There's regulatory open banking, where basically the government publishes some laws that establish open banking, or there's a market-driven approach where the banks themselves kind of take the lead. And of course, open banking is also here in Hong Kong. Conference is happening in Hong Kong, so of course we have open banking here as well. Right now we're in phases 3 and 4, where there's the unbundling of account information and payments and transfers. We've seen the past, we've seen the present with open banking, and maybe we want to look into the future. If we want to look in the future, it's good to build on what we have learned so far from the past. Banking as we know it did the bundling. Open banking did the unbundling. And what you can see is the cyclical nature of bundling and unbundling happening and playing out. So if you put it on a timeline, you get the sine wave, basically. So the next step, if you look at this, is very likely to be a rebundling with banking as a service. So what is rebundling and banking as a service? Banking as a service starts with what open banking has created, a set of APIs for banks. There's a set of APIs for the financial services industry. It's a little bit different in every legislation or in every country, but basically there are a set of APIs for banks. And in other industries, we have APIs as well. For example, in logistics, in insurance, accounting, business management, communications, transportation. So, and a lot more industries nowadays have APIs. And all of these APIs are forming our Lego box, right? These are all the APIs, all the Lego blocks that we can now play with and build new things with, that we can rebundle, recombine, and create new digital applications with. So whereas in the past, when we did bundling, we only bundled things within financial services, now we're looking at bundling things across industries, right? So you can, for example, get financial services which are somehow mixed with the transportation industry. You can have financial services which are mixed within accounting, mixed within business management, mixed within logistics. And as a consequence, we will get what's called embedded banking, or I like to call it specialized banking offers. For example, here's Kathy. Her life revolves around yoga, and she wants to be a yoga teacher and open her own yoga studio. But she doesn't know so much about business management. She doesn't know so much about banking, which she should know if she has her own business. But she's very happy that she came across a app that helps her do exactly um, do exactly those things which she doesn't know about. So it has financial services integrated into a yoga studio management application. Right, so it's very specialized, and because it is so specialized, it can help her with a lot of the tasks in business management and finances as well. Here's another example. This is Mike. He's a busy professional. He travels a lot, but he also wants to stay on top of his finances. So he doesn't have a lot of time. He has several bank accounts that he needs to look at. And his airline, so from the transportation industry, offers him an app where he can look at all of his different bank accounts in one place. So he doesn't need to open and close apps and authenticate everywhere. So it's just one place that he has to go to manage all of his finances. So what we see is when we look at all these different customers, is that the rebundling that is enabled by banking as a service will create more meaningful and personalized experiences for customers, and it goes across industries, right? So it's really customer centric. It's not industry centric. It's not mass market centric. It's centered around a customer. Now you can ask, how many rebundling opportunities are there? And that's a very good question. And let me show you a diagram where I tried to show you this. On the x-axis, you have the different rebundling opportunities or the different offers. And on the y-axis, you have the different number of users for the particular offer. So you have the standard banking mass market offers. They're used a lot, lots of users, and there is not many different offers for it, right? So with only a few different mass market banking offers, you can serve a large number of people. And then you have the more specialized versions that we have talked about, like for Mike, for Kathy, or for David, right? And there's a lot of different options, a lot of different recombination possibilities that are out there. So the resulting distribution is what we call the long tail distribution, because there are so many different offers that can be created. The mass market products are very efficient to create. That's why most banks build mass market products. They build a banking offer that appeals to lots of people, And the Pareto principle is basically guiding them, where it says with 20% of the products of the different apps or offers, you can reach 80% of the market. So are those niches profitable for banks at all, or should they stay with the efficient mass market offers? If a bank would focus on creating an offer for one niche only, I think it might not be that profitable. But if the bank can focus on efficiently covering a broad range of different niches, then I think it looks a lot different, right? Then all these niches taken together, aggregated together, they can be a significant part of the market share. But the crux is, how do you do this efficiently, and how can you get so many different niches served efficiently without creating digital products for each one of them? And the solution is, of course, for efficiently leveraging the long tail, is that you work with partners, you work with developers, and those developers are each within one niche. They're active within the niche. Maybe not, they're not in financial services, but they are, for example, in logistics, they are in business management, and they already developed those products for those customers so they can add on financial services. And what the bank now needs to do is provide those black building blocks, those APIs for banks that can then be integrated, and it needs to offer them on a portal and using a certain partnering process, and then it distributes it in a self-service way to those partners and developers who are building and serving the long tail market. So how does the value chain look like? In a traditional mass market, the value chain starts with a bank who has end user data at the bank. Then you have the bank's app. Value flows from the bank to the end user. Money in terms of fees flows from the end user to the bank. So that's a well understood mass market concept. And when we want to serve the long tail, our value chain looks a little bit different. The bank now is a so-called API provider. It creates APIs for its business assets that it has. Yeah? So it's a set of APIs that it brings out, and those APIs are then given to the fintechs and API consumers. The fintechs are building apps with those APIs, and they're building them for a very specific and narrow customer group. Value flows from the bank to the fintech, from the fintech to the end user, and money flows from the end user to the fintech to the bank. Okay, so it's a longer value chain, with a lot more players. One other aspect I want to look at is the competition that will change. Right? So banks in a mass market setting, they basically know their competitors. It's other banks, they look exactly like them, and they're addressing the same mass market. They have the same business model, and they come from the same industry. But with this rebundling that's going on, the competition is not so known anymore, because now we have competition from the long tail with their very personalized offers. And this new competition are so-called lane changers, right? They come from other industries. We've seen, maybe they come from transport, maybe they come from as an airline. An airline can make a financial services app. Whereas the known competition comes from the same industry. So the new competition is unexpected, whereas the regular competition is known. They create personalized experiences, they create mass market products. They have new business models, they have the same business model. So it's really shaking things up and making things a lot more colorful in the banking financial services world. So that was a quick look at the rebundling in financial services. We have seen how the rebundling creates more personalized, more meaningful banking products for customers, for niche markets. We've also seen how bundling, rebundling, and unbundling play a role in financial services. We have seen how the long tail supplements the mass market banking products targets a lot of different niches, and how competition will change as a result, and also how the value chains are going to change. Looking forward to share more with you. Until then, bye-bye.